Ryan, you there?
What's up, bro? What's up, buddy?
What's up, man?
Yeah, there's that familiar voice.
Oh, wait, start video.
There it is.
There it is.
Yeah, buddy.
What's happening?
We're good, man. So I'm just gonna set up. We got a few minutes here. I got the IG going over here on this other camera. I got all kinds of stuff. So I took my whole basement, bro, and I just turned it into a big studio.
Nice. I built a whole office upstairs,
There you go.
up above my garage.
There you go. It's the best time to utilize those space the right way anyway, because you know damn well we've always dreamed of using certain spaces for certain reasons.
I know.
And now we've got the chance to do it. So just to give you a quick briefing, we're not live yet. I'm not live on Facebook yet, but I do these 3 times a week with actual owner operator doers. I stay away from the politics. I stay away from all that shit. It's mainly entrepreneurs who are obviously going through, we're all in the economy together. So it's to keep getting the other investors in the industry and the hard money lenders and all the viewers a chance to see the inside of what entrepreneurs are still doing on a daily basis, no matter what. Good economy, bad economy, you still got to work with a plan. How are you executing? What do you do? How does that work? What's the plan moving forward? So yeah, we're going to hint on the current economic times, but it's really for guys on this call that are still working every single fucking day. And it's borderline inappropriate because I talk shit, and that's what I do. So I keep it very, very real, very vocal, very transparent. And I wanted to have you on for a number of reasons, man. One, you know, you and I go way back to the property preservation days. Two, who knows? That shit might just pop back up here in the third quarter.
I'm staying out of it. I do not want any
and
part
we can
of
laugh
that.
about that because there's going to be a lot of people jumping on that wagon, and I'm going to be like this. Good luck.
Good luck. We'll do everything to keep them out of it.
So let me get the IG going, and then I'll start setting up live.
All right. I'm going to have to take some schooling with you on that stuff to figure out how to do it.
I'm here to help everybody. You'd be surprised how many, and by the way, we're live on IG, but you'd be surprised how many people are really good at what they do, right? But they're just not good with the social media aspects of things. And it's not like I was born good at it. You have to practice like anything else. But once you start getting in the groove of it, it's pretty easy. I'm just being honest. I mean, I paid so many people to help set these things up for me in the past, and I pay for production videos and all these things. And ultimately, you're kind of forced to go lean and do it yourself, and you realize it's not that difficult.
Yeah, no, I mean, I love how you got the backdrop, right? I mean, you got my whiteboard behind me and you know, and a white ceiling. I need to have some plants and a CSFI whole setup like you have.
Yeah, that's what it is, man. I mean, at the end of the day, these are all the things that I had. These are all the things that I had for all of our boot camps. So I said, well, why would I leave it in a bag or a box? I could use my basement, set it up, right? This table desk that we're standing at, I built this as a workshop table for my my garage at one point. So I looked at it, I said, well, I've got black felt laying around. And I said, you know what? We're gonna have some fun with that. So
Sweet.
at the end of the day, I built like this little desk and all these table banners and runners. We've had them for all of our camps. So just so you know, we are live on both Instagram and on Facebook. But yeah, I mean, that's what it is. I mean, I have all this lying around. Why not use it? You there, bud? Hold on, guys. Brian might have a little technicalities. He might be all right. You there, Brian?
Yeah.
All right, good. It happens. So we're gonna get started about 2 minutes early. Why not, right? So today on Borderline Inappropriate, I've got a friend of mine that I've had in the industry for a long time. And I'm talking long time. I'm talking last recession time, property preservation time, when you would you'd be reimbursed, if you will, for board ups, lock changes, lawn mowing, you know, yard cuts and debris removal. A long time ago. That was ancient REO days. And ironically enough, that might pop its head out here in the next few months. So Brian and I come from that world. We spoke then, we still speak now, but Brian's doing something completely new now, which I think is fantastic. He's an owner, operator, entrepreneur. And like I said, he, like myself, has gone through a hell of a lot of things in the economy, both good and bad. And he's somebody I'd like you to listen to over the next 45 to an hour because he's got insight and he's got relationships and he knows how to leverage those relationships in business today. And with what's happening now, this is where creativity comes in. You've got to go back to being an entrepreneur. Creativity, ingenuity is what's going to get you through it. It's almost like offering your same service or product just in a unique, new, innovative way, right? Fair to say. So for us, Brian and I were kind of talking. He's like laughing at my setup because he's known me. I've never had this setup, but I said I have the space, I have the time, I have the material, right? Put it up. Time to build a studio in the basement. So here we are. So we are live, right? And I've got my good friend Brian Mingham. Brian, tell everybody what you're doing, the name of your company, where you're located, how it works.
Thanks, Ryan, for having me.
Absolutely.
So CFSI Loan Management is the name of my company. And what we do is we work for construction lenders, both traditional banking relationships as well as, private or hard money. So we're typically hired by a bank to come in and help them originate good construction loans. So on the front end, we do a contractor approval, which is near and dear to your heart and all the people on this
I wouldn't go that far.
Facebook Live today. We validate that the contractor's licensed and insured. We validate their budget and their project. We call it a project feasibility. Does your budget work? Is it enough to complete the project? It's important for a lender to understand that. Then they make a credit decision for the borrower. On the back end, we do what they call funds control. So we manage the project with the contractor and the borrower. So funds control means managing the budget, the line items, change orders, collecting lien releases and invoices for the lender. And then we have a national inspection platform. So we go out, trust but validate, right? We go out and validate that the work has been done.
Is it safe to say you operate as a third-party entity to these organizations, such as, I'm just going to throw a name out, like a Langarilla?
Langarilla would be a competitor.
Okay.
So we work for a Bank of America, Chase, financial lending institutions. We're the independent third party that they hire to make sure the work is done correctly.
Excellent. How are you in all 50 states?
We are in all 50 states.
Unbelievable. What, again, I led this off by explaining that we came from the industry of property preservation, and obviously we're both no longer in that. We've evolved, thank God, right? But what was it that helped you make that transition from property preservation to what you're doing now? Being that third party entity, seeing it from a different side, because you, like myself, we're now the advocate, right? We're now on the side saying, hey, we're looking out for your money. We're looking out for your project. We're looking out for the win-win for everybody and all parties involved. You and I both share that business model, if you will, that ideology behind the philosophy behind the business. What made that transition happen for you?
So you froze up at the very beginning of your question.
Sure,
I didn't hear it.
No, I was saying, what made you do that transition from property preservation to what you're doing now, which is really being the advocate now, watching the money,
Yes.
watching the people, watching the project?
Right. So you learn a lot in the property preservation business. You learn a lot about how dirty default is.
Default. I like that. Dirty default.
It's a rough space. It's the only business I've ever been in where somebody tells you how much you're going to make. Right. When Fannie and Freddie tell you that they're only going to pay you X dollars to cut grass, was an interesting concept to me, considering, typically people bid a job. But you have to do it right all the time. And I was in the lending business my entire career. So this business, CFSI and loan management, allowed
Little technical difficulty. Hold on. See what we got. So what happens when you go live? Things are going to happen.
Worked out.
Got it. So the last 30 seconds cut out, if you wouldn't mind repeating that. This is our new life. When you're online now, you got to work through the kinks.
That's exactly right. So, the key with moving away from a property preservation business, where your fees are dictated by, an agency, a Fannie, Freddie, or HUD. This business was a natural, hedge for me to get out. I was in the lending business my entire career, so I can do this.
I got you, buddy.
You're back.
You're back. You're back. Guy, you love going live when you have these little issues. But ultimately, that was a good transition. You saw the chance and the opportunity was presented there, similar to how we operated. I mean, when we left contracting, it was because the opportunity presented itself to start helping the investor from a different side of the table, which was we look at the deal.
And what you do is so important.
Thank you.
People forget about it. And let me just take a minute to give you, Ryan, a whole bunch of kudos here. We look at and evaluate general contractors and projects all over the country.
Mm-hmm.
We look at contractors. Our job is to protect the lender. Our job isn't to make a contractor feel good about themselves. Our job is to protect the lender's interest when they're lending money.
Mm-hmm. Mm-hmm.
And you'd be amazed in the number of contractors that, again, as a consumer, you always want the low bid, right? I mean, it's our nature. Oh, he's giving me a good deal. The lender doesn't think it's a good deal when the low bid isn't enough and somebody comes into Ryan's house and tears out his kitchen and runs out of money because he misbid the job.
Sure.
The lender.
Oh, it's too bad. It's such a good conversation. This technology is kind of freezing today.
We're good at construction underwriting. So what you do daily, helping people be better contractors, right? People are tradesmen. That's an important part to have good quality work. It's also important.
You know what's funny about that though is a lot of contractors stay away from us. It's actually the investors who come to us. Our 95% of our client base now is investors. It always has been. We served them differently as contractors. Now we serve them as their consultants and trainers to look at them and advise them to look at it like a contractor would. A lot of contractors shy away from us because we're exposing the game for what it is, and that's life.
But the investor's key, right? You get somebody that doesn't know what they're doing per se. You have to teach them how to recognize the bad contractors in the mix.
Yes, absolutely. And you know what you do and what I do is very complementary to each other because we're both servicing the money trail, right? The investor wants to be protected. I protect them. The lender wants to be protected. You protect them. You and I are on the same battlefield, bro. That's what's wild. And to be able to identify that risk in the industry comes from experience, one, from being in the trenches and dealing with shit all the time. And then looking at saying there's got to be a better way. And then going back to being an entrepreneur and using your ingenuity and saying, how do I become innovative enough to offer a service that might not be being offered yet, might not exist, right? So when we went into consulting, we created that space. There wasn't such thing as a rehab consultant that I could look at their model and say, okay, how can I make it better? I had to create one. There wasn't anything that says, let me build a rehab academy with a curriculum that I could emulate or look and study. I had to create one. And you know what? That was the best thing that ever happened because it's 1,000% organic. It's just complete experience of all these houses and all these investors and all these situations and circumstances that led to a better way. And you did the same thing. That's why I saw you on LinkedIn the other day. I'm like, dude, this is the time to work together, man, because I think we have something there. You and I can attack it from both ends and we win. These guys need us and they're gonna need us more than ever now because like I know, coming from that REO life, right? And I got a guy coming on named Ryan Smith on Friday from Chicago. He's an REI agent, or REO agent. This is his thing. And for those who came into the industry after, I would say 14, you have no idea, right? Because all it was foreclosures. All it was hedge funds. All it was property preservation. All it was asset management companies. And it was crazy to walk into these homes that were fully furnished. And the basements, because they turn the power off, the basements are flooded with 2 feet of water, and you got to pump these things out. And then you need 3 or 4 dumpsters to get the rest of it out. And you're not being paid what you should be being paid to do this. Like you said, you're told what you're going to make. But then you have to do what you have to do, right? But my point is, do I think that's going to happen again? Not to that degree, but will there be foreclosures? Absolutely. Will REO be back in business? Absolutely. So you'd be naive to sleep on that, investors who are listening right now, because that's going to come. So the reality is, when you look at a deal, and I think, Brian, this is fair to say, if you look at a deal now, this is the best time to start studying and learning slow, right? Because when an opportunity comes, that's what it's called. It's an opportunity that you could jump on because you might know a thing or two, right? Versus, I can't take that deal down because I don't know what I'm doing. Well, that's your fault, right? You have time now to start studying these things, to start studying the market. Stop living in fear, sitting in a fucking corner. That's not gonna do anything for you. You have to continue moving forward and taking advantage of the market for what it's going to be from a business standpoint. And that's where I think this is the time now. We're a month and a half in for most people in quarantine. I know we are personally probably about a month and a half in, almost at 2 months for us. And you don't think the first week I had nerves like anybody else? Of course I did. But the second week, I woke up on that Monday morning and said, it's time to grind again. Time to get innovative, time to sharpen the axe and say, what can I do within my current model? And we did that. We're 100% virtual now, right? Look, we got a studio in the basement. It's hilarious. But that's just shifting, right? We didn't stop. You can't stop. So with that said, Brock, what do you see happening? Because obviously you work with lenders. What's happening right now that you're seeing? Because obviously, if the lending continues to either increase or stop, right? Either or is a bad day. Then that means your business might start slowing down. Are you starting to see that?
Yeah, it's, again, I was in the mortgage business until 2009.
Right.
Right. So I went through all of it. I worked at some of the largest lenders in the country. I ran very large sales organizations. We were, buying $10 billion a month of loans. Right. Pivoted, right. Lost my job and all of that. Started a property preservation company. Turned lemons into lemonade. So during that time, right, liquidity became a big issue, right? We did too many bad loans that negatively impacted America.
Sure.
This is different, right? This is a medical issue, a pandemic that has caused everybody to buy a whole bunch of toilet paper.
Yeah.
I still don't know what the toilet paper's for, but people are buying a lot of it.
I still live by the credo that you could always just take a shower when necessary.
Yeah, or we're going to start selling more bidets.
Something. But that goes back to that ingenuity and creativity. Could be something coming our way when this is all said and done.
All said and done, you better just get all these investors and contractors we know to just put a bidet in just in case.
Oh my gosh.
So so this has been very different, very rapid. In 08, we went through months and months of trying to renegotiate with lenders that we had, changing guidelines and trying to do workouts. And I've never seen it, right? That 12-step program we used in 08 went to 1 to 12 overnight, right? It was, we know what's going to happen, so we're just going to cut it off immediately.
Sure.
In the fix and flip space, private money in particular, it died. It's been dead, now for weeks, and some of your investors, have definitely been hurt by it.
Mm-hmm. I agree.
So, there were loans that were closed on lenders' balance sheets that were never purchased. There are lenders out there that, have lines of credit or warehouse lines, repo lines that have been pulled or cut. There are, from the top of the capital stack, right? You look at any major bank or investment banking firm, a Credit Suisse, and Nomura, you name it. Everybody reallocated their assets because in that commercial paper space, there's a lot of things that can go on, right? I mean, in this non-QM lending, take a look at the traditional owner-occupied stuff from an impact lending. I mean, there.
Small delay again. Technology.
all of that. You have, right, you have auto loans, you have airplane loans, you have student loans, you've got all these other areas of lending that financial institutions look at. And with where the market could go in a stress test, right? If we really get to 30% unemployment, right? Where does all my money go, right?
Mhm.
Right? People stop paying auto loans and car loans and credit cards and everything else that's non-critical. You would think that this is the best asset class, right? People have a house, they have a secured asset. But with everybody moving money around, everybody dried up. And it was severe and sudden. We hear every day people are not funding draws on assets, leaving it up to the borrower to fund the rest of the project because people are conserving the cash they have left. There's already scratch and dent. I mean, there are plenty of investors out there that have called their lenders and said, I need an extension.
Mhm.
Um, they may get one, but remember, these are business purpose loans and not owner occupied loans. So a lot of the relief that's coming for the US citizens, all Americans across the country are getting some relief, really doesn't apply to this asset class. We need to make sure that, right, that all of the borrowers are making those payments. Foreclosure is a much quicker process as a business loan than it is an owner-occupied loan. All of that is going to create opportunities for investors. There will be people that don't do it. There will be a surge of new REO coming in the next 120 days, especially in this asset class.
I've been saying that. I agree with you. I've been saying that. I literally said it yesterday.
And for your people in particular, if you've never traded scratch and dent loans, and scratch and dent being defined as some part of an impaired credit loan and buying a note, somebody's FICO score the guidelines might need to be 700, and a mortgage lender closes one in at 699.
Chase just changed it, 700 now.
Yeah, 700 now, right? And so you close it at 699, and it's an impaired credit profile. So I don't pay you par, I pay you less than par. So I might pay you 95 cents for that. Well, Ryan, what is the value of the house, the $250,000 house you bought? You closed on it a month ago, started your demo. I've seen your houses. You demo those suckers down to studs. You teach your people how to do it right.
Depends on the house, right?
Right. So you just demoed that whole thing in the last month, and you're down to the studs, and you can't pay, and you lose it. Is that house still worth 250? No, it's not. Right. So I don't have the money to finish it. It's not worth 250, and the lender, they don't know what to do with it because they're not in the asset management or construction business. You are, right? What's it worth? 30 cents? 40 cents? There's going to be a massive opportunities for lenders across the country. Well, the opportunity is really for the investor. There's going to be billions and billions and billions of dollars of assets which are in some way, shape, or form under construction or demolition.
Mm-hmm.
They can't be sold to a consumer. They can only be sold to an investor. And those will be trading at 20 to 70 cents on the dollar.
And when did that happen last?
At all. Last time I checked, it was sometime in 2008, Ryan, 2009, 10, 11.
I think that's where you and I made our bones, huh?
Right. So now
It's coming back.
Now it's coming again, but it's it's unique. It's a unique opportunity, and the lenders know how to react better. They never, 2008, they tried to help and make it better. And it was an owner occupied too, right? So there was a lot more of the legal and foreclosure and bankruptcy and all the things that people do to stall a foreclosure. But now you're not going to have the same thing. It's a business entity loan, and people need to remember that. It's going to happen much quicker, and lenders are going to be very quick to act to get these bad assets off their books. It's a liability. They don't need the workout, and they're just going to shore up their balance sheet by selling these projects. So get your money ready, get your funds set up, go out and raise your money, and get ready to fix, flip, fix, hold. And
Hope you're all listening. I hope you're all listening.
Every asset class too. It's not just SFRs, Ryan. You've got multifamily, hospitality.
Yep.
Things are just going to stop.
I hope everybody who's watching is listening, because that's exactly one of the reasons why I brought Brian on, because he sees it from, he has the ability to see it from two different angles, one from past experience and one from what he's doing now, which at the end of the day, that's what people survive on, is what they've been through. And now they can kind of forecast what to expect. Nobody here is an expert, right? Nobody here knows what's going to happen. We have a pretty good idea from what's happened before how things are going to move. I think it's actually going to happen, but at a slower pace, actually. Because you think of it now, you got a lot of forgiveness and forbearances happening on mortgages across the country. So people aren't going to lose their homes yet. A lot of people are losing. The higher the interest or the unemployment rate goes, the less likely they can even pay it once they're able to pay it, right? When the forbearance is over, or the term is up and you're like, all right, we got to get some money in. If you're not working, you're still not working, right? Which means you're just delaying a foreclosure. I hate to say it, but that's what it is. So I think, I was asked this by another guy, and Ryan Smith, actually, because you sent me one of his properties in Chicago like a year and a half ago, and it happened to be one of Ryan Smith. So I mean, that's how crazy our circles are. People don't realize that sometimes, that you're connected in this industry. It's not a very large industry. It really, if you think about it, it really isn't. I probably know a legit 650 people that I would do business with right now, and there's probably maybe 1,000 that we could play ball with. But overall, it's not a massive industry, right? It's a tight knit. People know people. Be careful, don't burn bridges. Be cautious. Do good business, because people know people. But besides that tangent, the reality is, I think it's going to be slow. It's going to be slow and steady. I think foreclosures are going to happen well into 2021. And those opportunities will, again, like you said, be there. Private equity, I think, is going to be huge. Creative financing is going to be huge. And I'm friends with some of the best players in the game, and I listen to their strategies, and it works for them, right? Who am I to say no? I would never say that sounds crazy. In fact, I'm the kind of guy that's like, the crazier it sounds, the better. Go get it. That's ingenuity. Like, I don't know where you came up with it, but let me know if it works, right? Because that's what it's all about now. You just have to, you better try it. No holds barred. Try every door. All right. So what does the next 90 days look like for Brian's company? What does it look like for you? Next 90 days. Stand by. It's a little pause.
Something, you got to try it, right? You got to try it every day, Ryan.
Try everything. So what does the next 90 days look like for Brian Mingham?
So
tell the people how you are adjusting here and now.
So our job, remember, is we work for the lender, right? So we are going out, all of our lenders are
Stand by.
and flip private investors, they're still building. Our traditional bank ground up still. So what we're doing today is we're putting eyes on projects that are shut down or closed.
Okay.
We're helping the lenders identify risks. And your lenders and all of the lenders have the same issue. Is the project secure? Do you have construction fencing around it? Do you have trenches that are dug that you're going to walk away from for weeks at a time? Do you have exposed rebar Do you have people trespassing and falling and
So
impaling?
safety and security.
Right? So, is your contractor's insurance going to expire during this time? Do you have windows and doors and lumber on site?
So you're at the true risk analysis now.
Correct.
You need to present that risk analysis. Now, are you also presenting the options for the mitigation of that risk?
Absolutely. We go in and we tell them, you need to get your contractor to remove this stuff, put it in storage, whatever. We're telling them, we will get construction fence company out there and secure your project. We're telling them we will, board up the property just to get it done. Again, I work for the lender, so they have the power to tell the borrower or the contractor to get out and do it.
Makes sense. Makes sense 100%.
Yeah, and so,
Maybe it's because Brian's calling from the attic of his garage. We have to let him know that might not be a good spot.
Go in.
Brian, maybe it's not a good spot that you're in the attic of your garage.
Why? What happened? I keep going out.
It does freeze here and there, but I don't know. It's just funny because this is what the world has come to. Is everybody's got to figure out the technical difficulties. We're live, so it is what it is. So every time you freeze up a little bit, I'm like, stand by, people. 2 seconds and counting. I'm messing around, just like a news anchor over here.
Yeah. So,
but it's all good. So the next 90 days, though. So I see what you're doing. That's keeping you very, very busy as a company, though. Looking at that risk mitigation, presenting those options. Is there an end for you to that where you can go back to, well, better yet, let me restructure the question. What would it take for you to be able to go back slowly to not always having to worry about the risk, but more, in fact, maybe more draw management, maybe more focused on, is it viable, the whole deal in general?
Yeah, so we have a plan that just went out to all of our large aggregators and clients.
Okay.
We can mitigate the risk if your borrower goes down or the project goes sideways. So we will help the lender mitigate the risk by completing the project for them.
Interesting.
We will hire a new contractor. We will go in and do a cost to complete analysis based on where the project is today. We'll come up with the new costing budget for them. We will, again, hire the contractor and make sure that they can complete the project. We will do all the fund control. So we will tell the contractor, here's your budget, here's what the bank is willing to do. Go and do it. We'll process the draws when the contractor needs them. We'll collect all the invoices and lien releases, and we will do all of the inspections and then turn the keys over to the lender, or we'll also act as the asset manager. We will.
2 seconds. Frozen again. It's okay. Such a good conversation. So important. This guy literally is parallel to what we do in terms of the financial side of protecting lenders and investors. So important. So key. So important. So let me ask you this then. What kind of CRM system are you using to communicate with all 50 states? I would imagine it's got to be a pretty robust system.
Oh, absolutely. We built proprietary technology.
Nice.
That runs our business for us, which is, again, a big capital investment, but it runs our system. And
there's no other way to do it. I mean, there's no other way to do it because data's got to be centralized somewhere, right? Correspondence communication has to be centralized somewhere. We're about to finish our Rehab project management app, the first Rehab project management app in the industry. And we're doing a live demo the 20th and we launch May 1st, something we've been working on for under 2 years, but it's absolutely necessary for contractors to be able to communicate with their clients and vice versa. And you can also add in third-party entities for that temporary conversation, that walk through the property, whatever it might be. It's just a centralized data portal for real live conversations and real live data and annotations and all that good stuff. So I, again, like you, evolve with proprietary technology because you have to. You have to, unless you're going to stay small, which is nothing wrong with staying small. I mean, if people who are content, there's nothing wrong with that. Do you? But for me, and a guy like you realize, well, what we do is universally necessary. So you can't stay small. You do no justice to the system or to the industry by staying small, right? If you have something that works, you're going to have to spread that out. So I'm a big advocate for that virtual technology. You know, some of the technology that I think is also was transitioning in the construction industry from 19 to 20 prior to Corona really was the actual use of virtual tech, like 3D virtual, right? Which is like a Matterport, which is really, really becoming hot. And then using actual drones for the purpose of monitoring construction. And I never really thought about that. Thought about it, but I didn't think about that. But a lot of the high rises and the commercial projects, they're using drones to oversee plats of surveys and look at what's happening and where equipment placement's being brought, or they're using it for coordinates to have deliveries, right? And I'm thinking that's creative ingenuity to use a drone for, you know. So what's one of the cool features in your organization that helps you streamline 50 states into one portal? Obviously your system does it, but what's that one thing your system does that you think was your aha moment, aha need? Because I have mine.
You know, that's a tough one, right? So we have a national vendor network, right?
Okay. Technical difficulties, we'll get through it.
We're into it, our vendor management platform, our
Now,
account.
your vendor management, though, you're big into pit bulls. A lot of your partners, allies coming from that?
Yeah, Pitbull is a
Too bad.
NPLA, the National Private Lender Association. So if you're in the space, it's great to be part of Pitbull.
Hey, I told you, give me a speaking engagement. I'm there. Put me on the stage and let me do my thing. I will bring the dog.
Well, see, that's the best part. And, you know, participation like yours is so valuable to the people in the room. So we'll make sure we get you on the agenda.
My man.
But there's no one thing. One thing we all know about construction is it never goes right. It's never delivered on time.
Lots of contingencies.
And there's always a change order. So we have to be able to be flexible, nimble, quick on your feet.
Yes.
And be solution-based oriented, right? Because
yes,
you can't always get more money, right? So you have to be able to save money where you can, spend money where you need to.
Well, there's a big deal here. There's the deal of understanding the KPIs of construction. Now, retail construction KPIs are going to be very different than rehab, redevelopment construction KPIs, right? The things I've always said, and maybe you agree, maybe you don't, is when it comes to that, right? Talking about the contingencies and the issues and the change orders, all those things that are going to happen because it's redevelopment, not development, right? Is change orders. Who's asking them? Who's requesting them? Where are they coming from? Meaning, is it the investor asking for a change order? Is it the GC asking for a change order? Is it designer? Is it the architect? Is it the project manager? There's different rhymes and reasons for those change orders. Then most change orders always add to the timeline for the most part because you never planned for them in the original schedule. So now you're looking at it saying, okay, time really is money in the rehab game. How much is my change order? How long is it going to take? How much time does it add on, right? Then you have to go back to your critical path of project manager to figure out where I can get a float. You know, you're sitting there going, when can I buy this task back? And you're hoping that tile takes a day less so you can buy a day back. It's a complete clusterfuck of strategies in the rehab game, is it not? And that's why what you said is you just hit a home run with what you said. I couldn't agree more. Those KPIs though, if more lenders and more contractors and more investors studied the KPIs of rehab construction, that might help them look at the risk way before demo day one, which is what we try to tell people is you need to anticipate the ifs, the what ifs, and the what mays before demo day one, not week one, 30 days prior. Properties under contract, start risk analysis. It's seriously, because you have minimal time. And you know, like I know in construction, you don't go build a bridge after 30 days of planning. You don't go build schools with no planning. You don't even build a custom new home without planning. But yet the industry, especially 10, 15 years ago, These investors were taught, come out and have hire your contractor and have your contractor do all this. And your contractor's like, no, dude, you don't even pay me enough to do all this planning for you. And then what happens?
Yeah, it blows up. And rehab is the hardest project to work on, right? Building a new house is easy, right? As you said, there's plans, there's specs, there's permits.
And there truly are phases. There are true phases that take time. You're not trying to cram 22 trades into a 3-man crew in 6 weeks. It's illogical. I mean, I love the rehab game. That's my niche. It'll always be my niche, but I do speak the realities of it. 22 to 25 subs needed to build a custom new home, yet you're going to demand that of a 3 to 4-man crew who's a C-level contractor to begin with, and expect them to be able to do all that work when maybe they're good at 1, decent at 3, and okay at 4. You're not going to like the quality. You're going to pay twice for it. Then you're going to bitch at them. Really, whose fault is it? It's the nature of the industry.
Absolutely. And it goes back to, again, we call it project feasibility. Is the project feasible? And just because you have a bid, it doesn't mean it's the right bid. You skipped something, you left it out, your scope of work wasn't adequate. You go in and you're expecting one set of kitchen cabinets and you see the IKEA sticker on the outside because you assumed it said kitchen cabinets and didn't say countertops and sinks. Yep. So you got cabinets and no sink and countertop. Well, what good is that? That's what I bid, right? And in the rehab game, right, there's no more money. You got a loan. So who comes up with the money on that, right? It's a change order. Well, the borrower wasn't expecting that. So it is so critically important for investors and consumers to do diligence on the contractor. You know, good contractors are busy. Bad ones aren't. You know, if the first guy shows up and tells you it's going to be 20 grand for a rehab and puts rehab 30,000 on your line item and you're like, great, let's take it. That doesn't mean anything, right? Where do those change orders and those budget line item movement, right? Those are the fund control things that we manage.
I wouldn't go as far as to say they're fun. They drive me nuts.
No. But the fund control is such an important part when a contractor starts moving line items around, right? Money comes out
you mean as in reallocating?
Reallocating, right? But when you reallocate from framing to profit and overhead, it may not be the budget still balances, and that's what people look at a lot, right? Like
that's the problem.
A land gorilla technology or something else, right? The budget balances, and if you're only looking to keep your budget in balance, then that's okay. But when the line items,
that's if you have tunnel vision. It's not okay. It's not okay because that's where investors get in trouble. It's not okay. You have to understand how the GCs and contractors are making a markup in the first place. You have to understand what their fees should be given market rate. You should, and you have to know that, yeah, you can reallocate line items, but what are you actually doing? Like you said, when you take money from framing and maybe it's like $18,000 in framing and take $5,000 and throw that in the kitchen because the kitchen's short. What really happens when you do that? Looks good on paper, but are you damaging progress? You're damaging progress. Because that draw is going to come, and guess what? That draw is going to be short based on the metrics. Right?
And you're exactly right. And that's, you know, we make people, you know, prove that they saved, right? Lumber was on sale. Okay. You know, you got the same amount of lumber, right? I got 1 million linear feet because I got a discount because I bought so much. Okay. That's legit. Not just, oh, I shrunk the house by 500 square feet. That's where I saved the money. Well, what happens to your ARV? Then, you know, you have less stucco, less windows, less roofing, less insulation, less electrical, less rough. Where are all those savings for 500 square feet less? You ask
they look at you like, I can't answer that.
Yeah, it's exactly right. But that's what we do for a living, right? So we catch those bad contractors when they're trying to do something and protect the investor, protect the bank, protect the borrower.
I think that's fantastic, brother. All right, so for those who've never heard of Brian Mingham, they don't know what you've really done. They hear what we talk about. Clearly, we have tons of synergy because we live in this space. What is the bit of advice, legit operational operational, COO type advice. What do these people need to do right now that are in the space of either lending, construction, or investing? Or maybe all the above.
Number one thing is know where your project is today.
Or your project is today, okay? Meaning
Um,
at all the above. Price point, within the budget, within the schedule, within maybe time of year, market, season.
all of it, right? Is so if anybody's watching has a construction project going, again, if you live in Chicago and have a project in Chicago, get in your car, drive by. You know, what we've done is we've made it easy to acquire real estate in other areas. You may not live in that. You may have, projects in Michigan or Ohio. Get out there, see it, hire an inspector, know where your project is, talk to your contractor. The conversations I have with my lenders are talk to your contractors, find out where the project is. Are they still working? Are they in?
2 seconds on the pause, 2 seconds on the pause.
Contractor, find out if your lender's going to submit that construction draw for you. Are they going to reimburse you? You need to watch your cash right now. Make sure you're doing the right thing. Is your ARV, your after repaired value, going to take an impact at the end of the day when you go to sell this? Are we going to have a 5% or a 40% price hit? You may want to flip this house. You may have to rent it.
Boom. I legit said that. I said, you have two options right now if you continue to rehab. And the second option is always renting it. So have your backup plan, have a backup budget and a backup scope of what that would look like if you had to make an adjustment tomorrow.
Exactly. Because you might not put in all those high-end things if you're going to make it a rental, but you have to be prepared for it, especially if you have to take over funding the remaining part of that draw process if your lender chooses not to continue to fund your project for you.
Bro, you touched my heart. You said everything I say. This is heartwarming. This is heartwarming.
Yeah, no, it's great. Shit's gonna get crazy. I mean, very crazy. And if you don't have the stomach for the game, get out early, right? Sell your real estate now. It's going to get worse. So you either need to prepare for it, raise more money, and go big, or don't come crying when you go to sell it, right? We're seeing stuff trade today at 80 cents, and it's going to get worse, right? Newly originated performing, not non-performing, newly originated performing loans, 80 cents. And that's ugly, right? You get $100 million pool of loan, you're trying to trade at 80 cents. That's a haircut. It's going to leave a mark. Be prepared for it. Have a plan. I mean, you couldn't have said it any better. Have a plan.
Unbelievable. You and I were totally aligned on this call. That was fantastic. And we haven't spoken in a while. So I really, really appreciate that insight, because like-minded individuals usually tend to stick together, but also usually survive, and they usually thrive. There's a big difference between surviving and thriving. And it does come down to planning and leveraging, leveraging relationships, leveraging friendships, leveraging people in the industry. And this is where a lot of unique partnerships are built. For example, I make jokes with Brian on this call, oh, we should do something together, but we probably should, because there's a way for us to work together now and maybe in the future, but maybe just now, maybe just in the future, who knows? But the reality is, when you start looking at these things, all you entrepreneurs that are listening, you have to start looking at maybe what you offer as a product or service is good in a good economy, but it would be great right now with somebody else's piece, right? Nothing wrong with that collaboration. I think collaboration is absolutely monumental right now. And sometimes, right, this is where millionaires and billionaires are built, or in times like these, when they do forge those alliances and they start blending together services and products that otherwise have not been on the market yet. And all of a sudden they become a superpower, right? It's like, oh, they got this, and this. Oh, these three brands came together? Well, yes, they did, because they all wanted to survive. And that's big business thinking. That's big planning ahead. So Brian, tell everybody how to get a hold of you. Where can they find you? If lenders want to work with you, if anybody wants to reach out to you, how do they get a hold of you?
So the best way so our website is Think with your brain, CFSI, Charlie Frank Sam India. So it's thinkcfsi.com. Name of the company is CFSI Loan Management. And email address is Brian Mingham at thinkcfsi.com. We're all over the internet. We're all over LinkedIn. We're always posting and trying to give people, as Ryan does, right? We go and see each other's posts all the time. It's providing information to the market about what's going on and how, you know, and I don't need to go to the big house and do it the wrong way.
Do it the right way. Awesome, brother. Well, thank you very much for coming on. I know we had a couple of technical difficulties here and there, but it happens. But I think overall,
we'll be experts next time we do it.
I think overall the value was there. I mean, on this call, it's very unique for listeners to hear about really construction, about loans, about from a different perspective, not like actual investment loans, but construction issues. You know, it validates the rhyme and the reason as to what we do when we both can agree on pretty much everything to say that's what's happened, it's what's happening, and that's probably what's going to happen. So that's key. And I enjoyed this conversation. I definitely want to do it again. And thank you very much, Brian. Have a great day. Take care of your family. I look forward to seeing some more pictures of you laying by the pool with your dog, trying to decide which wine to drink tonight.
You got to keep it real. You save all this wine and now you got to drink it. You got nothing else to do.
I'm fully stocked. I actually believe in you know, small business, right? So I called a friend who has a phenomenal wine bar out here. That's Lucky Emma's, by the way. And I said, hey, I know you can't sell. I said, but can I come by your studio and I'll buy a bunch of wine? She's like, absolutely. I went there, dude, boxes and boxes. I was just picking different things. I came home, I opened up the Tahoe. I looked at my wife. I said, look at this. I said, we're good for a while.
That's the way to do it, brother.
Awesome, my man. Well, thank you very much, Brian. Have a great day. I will upload this to all of our YouTube channels, and obviously I'll share it on Facebook and Instagram and all those good things. So thanks, brother.
Awesome.
Have a great day.
Be well, everyone.